All right, welcome to our webinar on our surveillance products' new capabilities, specifically cross-product surveillance and multi-asset configurable models. We're going to be explaining that to you over the course of the next hour. My name is Ted Morgan. I joined TT about 8 months ago through the AbleNoser acquisition. I'm joined here. I am the head of compliance products here at TT. I'm joined by Jay Biondo, who is the head of our surveillance products. He is based in Chicago. I'm in New York. I'm also joined by Dan Langley, who is the head of our European sales office, and he is based in London. In the 8 months that I've been here at TT, it's been great because compliance products is an area that we are making an investment. And there is a lot going on. We're constantly introducing new features. And today I'm going to tell you about two of the biggest ones. Spoofing is a topic that's been on everybody's mind. And when I say cross-product surveillance, the primary application of that right now is in the area of spoofing. I'm sure you're all aware, because you've joined this webinar, that European and North American regulators are getting more and more aggressive about detecting of spoofing activity, and the fines are getting larger and larger, including the eye-popping $920 million fine JP Morgan received in 2020, but that's just one of a list of a dozen that I could quote. So Jay is going to share with you how our spoofing model works based on machine learning and a new capability that we've developed that I believe, to my knowledge, is unique in the industry, which is the ability to link instruments across exchanges, across asset classes, across product types that are often involved in regulatory spoofing actions these days. For instance, both CME and ICE have futures for metals, right? You could be on one side in one exchange, the other side of the other exchange. Most surveillance platforms right now would not detect that kind of spoofing activity. We've made the investment to go there. We are also introducing configurable models, and Dan's going to talk about that. In case you don't know, our surveillance platform is called TT Score, been around for a while. It traditionally had models that were tuned primarily by machine learning. And we are introducing a new type of model, which Dan is going to talk about, which users can configure themselves. There are dials, if you will, that can be twisted. So Jay, let me hand it over to you, and let's talk about cross-product surveillance.
Hello, everybody. So while we are transitioning over here into discussing the topic of spoofing, I just wanted to give a little bit of a background here about how we have applied machine learning to the identification of spoofing patterns in the past within TT Score to set some context before we move into the cross-product spoofing topic. And some of you may be familiar with Score already, but others who have joined today may not be. So I just really wanted to kind of quickly touch on how we historically have handled the identification of spoofing patterns. And basically the way that we've done that over the course of the last 7 years or so is that in the early stages of TT Score, customers that were under investigation by regulators such as the CFTC, and other regulatory agencies and exchanges. And those customers shared the data from those investigations with us. So we were then able to take that data and use it to train a machine learning model to recognize the optimal set of mathematical vectors. We call them the features of spoofing patterns. So now we have this machine learning model that can recognize various different patterns of potential spoofing. So things like layering, flipping the market, spread squeezes, or even just traditional spoofing, all these different slang terms that are thrown around in the industry, but ultimately bucketed under that broader term of spoofing. We now have a machine learning model that can identify those patterns without our users having to calibrate the parameters themselves, because all of their data is being measured in mathematical similarity to the regulatory case data that we have trained that machine learning model with. So we're going to be able to provide people with this unparalleled detection capability for these different patterns of spoofing across different products that have different liquidity profiles, even during a single trading day. But not only do we detect the activity, we also then classify or score the activity. And we're scoring on a scale from 0 to 100, with a 100 score meaning that the activity has such a high degree of mathematical similarity to the regulatory case data that we've trained the model with, that now you as a TT-Score user need to investigate that activity yourself and draw the ultimate conclusion of whether or not spoofing did in fact occur. And we tell our users we want them focusing on the alerts that are being generated that are scoring 75 and above on a day-to-day basis. So we're creating a workflow priority for our users through the scoring mechanism. Okay, we call it a risk score. Now, to put this into practice, just to kind of give you an example here of how this can be used, this scoring system, what I'm showing here is the heat map. And I've loaded up a day of activity from back in 2021. We're looking purely at spoofing here. And what you see on the heat map here is that this particular trader has a very large square. But it's lightly shaded. And the reason that it's lightly shaded is because even though the trader is generating a lot of what we call clusters of activity, okay, a cluster is essentially a grouping or a segment of their order audit trail data that they are generating through their trading activity throughout the day. Even though they have the largest volume of clusters that are being generated here, there's an average score of only 6.34, which is why even though the square is large, it's lightly shaded. We don't want our users focusing their time and energy on this activity to begin their day. This is where in a lot of the other systems that are out there, you may find yourself kind of in a quagmire of false positive alerts. That's what we want to avoid. And instead, we're going to point our users to this little red shaded square. Because even though there are only 3 clusters in this particular square, there's an average score of 93.3. Okay, so this is the needle in the haystack within this data set that we want our users to be aware of when they log into TT-Score in the morning, and be able to show them this visually to make sure that they're being as efficient as possible with their daily reviews. Okay, and that is the practical application of machine learning to trade surveillance that we're able to provide in TT-Score. Once you've identified that needle in the haystack, you can click on the square. It will bring you directly to the alerts that comprise that square. Once you get into this screen, you now get tools to investigate this activity yourself, because the score is just pointing you in the direction of where an issue may lie. It's not making a legal statement that spoofing has in fact occurred here, okay? What we still rely on the human expert to make that determination, and we provide tools within the alerts here for you to conduct your investigation. And just very quickly, because I want to jump into the cross-product capabilities here, we're just giving some statistical metrics here at the top of the screen. We're giving the audit trail data here at the bottom of the screen. We're color coding it so that people can quickly see what the events were within the alert. And then we are also allowing the user here to replay the activity in the context of the market on a replica of the TT trading ladder, okay? And for those of you who are not familiar with the trading ladder, what you see here, and I'm gonna make my screen a little bit bigger here just so that everybody can see very clearly here on the right side of the screen. Each one of these red columns here in the asks section, each one of these numbers, that is all market participants' quantities combined at those price levels on the sell side of the order book. The black line is where the top of book is, and then down below, the blue squares here, those are the buy quantities for all market participants combined at those buy prices here in the order book, okay? And now what you see here in the work column, that's the trader in question's quantities. And what you see so far is that the trader added a 50 lot sell order at the price of 49.06, okay, and then got filled on 5 contracts. And now you're seeing that reflected here in the ladder as well. And so you see the trader still working 45, sold 5, and is 45 of a total 46 contracts at that price in this particular moment within this cluster. Okay, and now what you can do is now step through the events within the cluster. And I'm just taking my mouse and moving forward in time here. And what you see is everything in the screen here is going to update in unison, okay? And as I move forward, I'm going to get to a point in this chart where we come to a diamond, Okay, and this chart, what this chart is reflecting here, we call it a pressure chart, is what we're visualizing here is where a trader may be using a large order on one side of the market or orders and using this type of large volume on one side of the order book in order to potentially create book pressure in order to influence other market participants in order to get filled on smaller orders on the opposite side of the market. Okay, and the diamond in this chart is a very critical piece of the analysis and what we provide here in here, because this is where what occurs at the point of the diamond is what we call an imbalanced fill. Okay, and you can see now what I mean by that is that at that point in time, the trader still has the 45 on the sell side, puts in a smaller buy order for 5 contracts here, and gets filled right away on that one contract on that smaller buy order. Okay. And then in the chart, you can see that the red line here goes down quickly. What that's indicating there is right after that imbalanced fill is received, the trader is going to cancel the 45 that was resting there on the sell side. Okay. And that cancel occurs within about 3.5 seconds or so. So it's fairly quick, typical type of manual trading activity here. And ultimately, this is what would be somewhat classified potentially as a traditional spoofing pattern where the trader's using that large order to potentially influence other market participants. Now, where it gets more complicated is where a trader may be using a large order in a single product in order to get filled on smaller orders in another product's order book, or even in multiple products order book in different markets at the same time. So what we have now created here, we have leveraged the machine learning technology that we've been using to create the traditional score spoofing model that I just showed. And now what we allow our users to do is go into the preferences section here of TT Score and create cross-product configurations. Okay, and what I mean by that is that the user can add a configuration here. They can name it whatever they'd like. They can select a particular market. So I'll just use the CME as an example. And once they've selected the market, they can type in, for example, a particular product. Okay, so I'm just putting in ZS. I'm going to scroll down here to the bottom. You'll see that there are a bunch of different potential options for ZS, different option strategies, and ultimately, here is the future. So you have the futures, the spreads, and all the various different options, and you can input these products and combination of products here into this section of TT Score. If you are entering in something like a future or a spread, it's automatically going to capture all of the different expirations for those products. You don't have to put each individual one in there. But right now, there's a little bit of upfront manual input that we have going in here for these product configurations. That's the way that the process works today. In the future, we will automate this more. We're already starting to put together, some new ways to automatically populate some of these product configurations here in the user interface. But for right now, we're going to have people be putting in these products themselves. You can see some examples down here where you can put in various different product combinations right here. Okay. Once you've done that, you can see the list of the different models here, the different cross-product models that when we are processing that data essentially on a T+1 basis, we are going to be combining these products into a single synthetic instrument. Okay, we call it a composite instrument, but we're really creating them into a single synthetic instrument to try to identify the same types of spoofing patterns with these models that we identified with our traditional spoofing model that was looking at one product at a time. Now, in order to help people also with their inputting of their various different products in here, there's some other tools that people can leverage right now. And let me just show you a quick example of what that looks like. So, for example, if you wanted to see what products your traders are trading most commonly or are generating the most volume with, you can come right here to the heat map that I showed before. But instead of sorting by trader, you can sort by instrument. Okay, and right there, you're going to be able to see here are the various different instruments that my traders are trading, generating the most volume off of. Where are they most active? And you'll be able to see that information here on the heat map very quickly. You also have the ability to run some of other reports that we have in TT Score to find out what products they're trading most commonly. And you can export those all out into Excel, but everything that's being ingested into TT Score, you can run various different reports to get various lists of all the different instruments that are being traded. And you can also use the heat map here too, which is a nice visual tool to kind of get you started to where you know what instruments you want to be putting into those cross-product configurations in the user interface. Very quickly, before I proceed into an example, while I'm loading up an example here of a cross-product alert, I did want to point out that you do not need to be only using TT trading screen data for TT Score. Yes, the TT screen activity is automatically captured within our database that feeds TT Score here within Trading Technologies. However, you can also use Exchange drop copy feeds to get data into TT Score. We have a vast library of drop copy feeds that people can use. You can also write to our TT fixed drop copy spec to get all of your data into TT Score. And you can also do file uploads as well, so flat file uploads. And most recently, we can write ETL programs for people to ingest their data into the database that feeds TT Score. So we have several different ways now in order to get all the data within your trading firm into TT Score to give you complete coverage across all of the trading activity. And now I'm just going to switch over to showing what a cross-product alert looks like. When you initially see this, you will see a lot of similarity between what I showed before in a single spoofing product alert. Okay, but now what you're going to see here it is, again, it's very similar. However, you can see in the instruments here, there's two different futures instruments. Okay. And it's the same chart and the audit trail at the bottom. But what you can do if you want to is you can break out each one of these instruments into their own individual chart if you so choose. Okay, and you'll still be able to see all of the different imbalanced fills and the same type of pressure, book pressure information here. Okay, but the real highlight here is when I load the price ladder, is that what we allow the user to do here is load up what we call dual price ladders. So you can load up a price ladder for each one of these products side by side. Okay, and then once you've loaded these up, you can then synchronize the ladders so that when you're replaying through the activity here, everything is going to be synchronized again between both order books so that you can really get a very close look at what was going on with this trader across these two different futures instruments. Essentially, what we're doing here is we are putting you into the shoes of the trader and helping you see what they saw so that it will allow you to more effectively try to determine what their intent was, okay, at the time of this activity. One other critical aspect of what we're doing here with the synthetic instrument and how we're identifying the imbalanced fills that could be potentially being generated here is that we're using notional value. Okay, so you still can see the different order quantities here in the order books, but if you toggle to notional value, what you'll see now in this chart is instead of order quantities, you'll actually see what the notional value is of the contracts that the trader has in both of these order books. Okay, because we want to make sure that by calculating this notional value, that even if somebody is using a one lot in one order book that has more value than 50 lots in the second order book, that you're not missing those imbalanced fills. So we can't just purely look at contract quantities here. We're going to be looking at the notional value of the contracts that the trader is using here in this trading activity. And now when you replay through the activity within the alert, again, you're going to be seeing these imbalanced fills being clearly identified here in the chart as we move forward. You'll see here on the left side, on the left ladder, the trader's got a 15 lot order there and an 18 lot order there, while the trader's got 150 here on the buy side. Okay, and he's actually got 150 and 100 on the buy side, while all of the fill volume here is coming in smaller orders on the sell side in this order book. Then as we move forward a little bit further here within this alert, you can see more fills coming in on those sell side orders. The trader also adds more book pressure here in this second futures instrument at this time. So the notional value here is much heavier here on the buy side of these correlated instruments. And the traders' quantities are also significant percentages of these price levels within both of these order books. That's another critical aspect of what we're looking for here, because if the traders' order quantities here within the order book were not, a significant percentage of those price levels, it would be harder to make an argument that they were able to influence other market participants with those orders. Not only are we finding the imbalanced fills with the notional value, we are then also looking for whether or not the orders involved are large enough, essentially, to potentially influence other market participants within the order books. And if these orders are not large enough, we will then reduce the score of the alert, because the likelihood that the trader was able to influence other market participants with those orders is reduced. Okay. And then as we move along a little bit further, you're going to see the trader gets one more fill there on a 15 lot sell order here. The fill comes in, and then after that, as we move forward a little bit more, the trader is then going to remove all of the orders that the trader had there on the buy side of that order book, indicating that they may not have ever intended to get filled on those orders. They were engaging in some potentially layering type of activity here in order to get filled on smaller sell orders on the opposite side of the order books there. Really quickly, before we move on to our configurable models, I did want to show one more example here, because in this particular instance, it's a little bit unique in that the trader is going to employ an iceberg order on the small side of the imbalance here. And just to show you what that looks like here in the ladders, I will load up both of the ladders side by side, synchronize them, and then I will move forward in time here to the point where what you'll see at the end of this alert, you can see, again, the trader's got a great deal of sell side pressure going on in these order books, and that the sell side notional value is higher. And then as we get to this point in time, the trader's going to throw this small iceberg order here on the buy side. And let me just show you what that looks like very quickly. So now at this point, what you're seeing here is while the trader's got these large sell orders in both of these order books, the trader's going to put a one lot iceberg order in here and disclose one, and there's 59 undisclosed behind that one lot disclosed iceberg order there. So while the trader's using that book pressure to kind of, push those prices down and potentially influence other market participants, the trader's then going to be able to put that smaller iceberg order right there, and essentially what we call reap the benefit of that book pressure there to get filled on that iceberg order, and then essentially, at that point, get all the imbalanced fills that the trader wants. And there is a point where the trader quickly also at that point cancels that 15 lot sell order that's resting there at the top of the book while they're reaping the fills on that smaller iceberg order on the opposite side of the order book there. Very quickly, you can also review each one of these alerts. You can put review notes into each individual alert. And then if you would like to escalate something to an internal investigation, you just create that here. If you create an investigation, those appear here under the investigations tab. And, TT Score has a full case management system allowing you to open internal investigations. You can attach clusters. You can track the status of the investigation. You can assign it to different owners that are using TT Score within the firm, add comments, upload attachments. And again, everything within TT Score is going to be saved for you within a forever audit trail and in write once, read many, or worm format, because in case you ever get audited or you get regulatory inquiries, you will always know that all of the reviews that you conducted were all stored here within TT Score in perpetuity for you, that you will be able to access as long as you're a customer. And with that, I will hand things over to my colleague, Dan Langley.
Thanks very much, Jay. Just before I share my screen, in addition, obviously, to the cross-product models and other core functionality, case management, etc., that Jay just touched upon there and run us through, one of the transformative developments we've added to the TT Score product this year has been to combine all the benefits of those machine-learned market abuse models that have been tried and tested over many years that Jay mentioned there, with our new configurable models module, with the idea being to create a simple, combined and modern user interface. So the the configurable models module allows firms to take control of all of your trade surveillance requirements. So each model allows for unique parameterization and filtering, etc. So users can have the full flexibility and autonomy when configuring market abuse models across, all of your entire firm's trading activity. So in a nutshell, by bringing together TT Score's machine learned market abuse models that have been tried and tested over many years, and the configurable models module within one product and one user interface, giving firms the ability to sort of uncover those blind spots and proactively address regulatory compliance issues and violations, etc., before they happen, preventing fines, etc., and giving you that additional confidence that any configurable models results that may have been missed or missed any potential market abuse scenarios, they're very likely to be picked up and detected by the machine learned models also available within TT Score. And this approach also has a secondary impact, acting as a more proactive prompt to firms to potentially review your current customizable models parameters to ensure they are adequate and meet all your needs by simply recalibrating your customizable models parameters with no insight. So you very much get a belt and braces approach with TT Score by giving you those machine learned models in conjunction with that customizable piece. So in addition to that, the customizable models also broaden Score's asset class scope, so to give your firm full coverage of your trading activity across multiple asset classes, so including fixed income, equity, foreign exchange, crypto, etc., to name just a few. So by bringing, as I said, these three attributes together, multi-asset, machine learned models, and the ability to have a conventional-based, more customizable models piece, TT Score now really becomes that kind of one-stop shop for multi-asset market monitoring abuse, with over 40 different multi and cross-product models covering various different key regulatory jurisdictions across the globe, FINRA, SEC, FCA, just to name a few. So that being said, I'm just going to quickly share my screen. So as we said before, configurable models now available all within that one uniform UI. Jay obviously ran through the score piece previously, all the same look and feel. We have here at the moment what we would call the sort of landing page. So you can see all of my configured model instances at the moment, instance names, which are all free text and free form. I'll run through kind of an example of how you would set some of these up in a moment. The actual model name, so you can see a few I've got set up here in the list: excessive cancels, front running, etc. And then a quick subset, a quick breakdown of all the different parameters that I've currently got set for each of those, and any filters that I've got currently in play for those as well. Across here, you've got a drop down which shows you the full history. So we have a full audit trail of any changes that are made to any of the parameterized models throughout the whole life cycle. So in the event that you wanted to go back to a previous configuration or review any deltas in changes for models and parameters, can do that all from the front end via your own, as you wish, as opposed to having to come to us and ask for that kind of information, all available from the Score front end. So in the event I want to create a new model instance, click on the Create Model Instance button there. Hit the drop down here. As I said before, we've now got over 40 different models. You can see here various different market abuse scenarios you'd expect to see, giving you that full market abuse regulation coverage in Europe and the UK, and also as well in the US and Asia too. So we've got a full jurisdictional cover from a global perspective there. I'm just going to select one of these now as an example, excessive cancels as an example. So you'll see now I get some additional boxes that I can fill out. So instance name here. So the core concept around customized models is the ability to have multiple instances of the same type of model. So the advantage here is that you can see where I've got 3 different parameters here at the underneath that I can set. So I have what we call matching key. So matching key, basically, as the description on the screen says, determines the type of entity or profile that you want to monitor. So you can effectively configure the model to track at a trader level, account level, group-wide entity level. Any attribute effectively or any identifier that's in your data set that we can bring into Score allows you to monitor at that level. Here I have a tolerance multiplier, which effectively the number of order cancellations that must be higher than the number of the trade messages times the multiplier, and then a minimum number of order cancellations. That's just putting a floor basically on. I don't want to see any models or any alerts get generated whereby you know, the minimum number of cancellation thresholds not being met. So it's giving you that kind of ability to set a floor on any results. So once I've kind of decided that, you know, example here, I want to monitor a per trader level, and then I'm going to say, you know, I want to be able to monitor, in this case, at a per exchange level. So as per kind of exchange rule books or trading venue rule books that you might be operating on, there will be, you know, potentially different thresholds of what would deem to be excessive cancels. So different ratios, one might be 5 to 1, might be 10, etc. So the advantage here is that having this concept of being able to configure multiple instances of the same type of alert or the same type of model gives you that flexibility whereby you can actually, as I said, specify on a per exchange basis. So I could have an example here, instance name exchange CME, and then if the tolerance multiplier was 10 to 1, and actually I didn't want to see any alerts whereby there was, you know, less than 10, I can set that there. And on the right-hand side, you get the full filters list. So these are some obviously pre-canned filters that I've set up before. So again, I have the ability here that if I want to come in and select CME here, what this will do is mean that CME filter, so I'm obviously looking for this particular MIC code here for the CME exchange. And by selecting that, if I then type a message to say updating configuration CME, every change requires a comment or a log, again, that's fully audited. So in the event that you want to go back and take a look at any changes that have occurred, you can do that. Click the save button there, and then that will create the instance effectively into my list, which is at the top here. So I'll just open that back up again. In short, as I said, you've got this ability to create filters and apply them to specific instances of the alert. In addition to that, you can set multiple filters. So if you wanted to, as an example, let's say I want to set a excessive cancels alert on a per exchange basis. So I've got a dummy exchange here called exchange 11. So I want to be able to set a particular tolerance and multiplier here, 100, let's call it C, let's call it 40. Do that there. And actually what I want to do is not only apply at the exchange level, but I also want to do it at the product type. So I want to say for exchange 11, for equities, I want to be able to say that in the event that this gets breached, I want to get an alert, and then again, just update that in there and save. So now you can see in my breakdown here, in my filters, I've obviously got a quick overview of what my parameters are, and I can also see here as well the exchange 11, including the exchange level, and also only as a sub product type exchange equities as well. So again, you've really got that ability to drill down and be really specific and precise with the parameters and also the filters that you want to apply to those particular models. In terms of the look and feel, the alerts, Jay ran through obviously a couple of examples previously on the cross product. As you can see here, this is actually an excessive cancels alert. The look and feel is exactly the same. So the idea here is that, as I said, one uniformed interface, one browser, one area where you can come and view all the results for those machine learn-based models and also the customizable models. And you can see here as an example, here's the score similar to what you get with the machine learn models, trader ID, instrument, etc. So we can see here, this has been generated with short description, timestamp, who the trader was, execute a total of 1 trade with 100 order deletes for this particular security, and then obviously detailing around the ratio of order deletes to trades is 100, and that breaches the tolerance and the multiplier that we set. And also, again, telling you that venue. So again, you've got that specificity in the actual alerts that are being generated. In this case, telling you that it was on that particular venue. And as I said, if you then get any of the alerts triggered off of the different instances that we'd set at the different venue level, then that would be detailed within the alert details as well. So you don't have to go looking for it. You don't have to go hunting for it. It's all, you know, all up front and in the UI for you to view. You've also got, as I said, as Jay showed earlier, the market replay tool on the right-hand side. So in the event that you wanted to, you know, overlay sort of what was going on in the market at the time, you've got that full price ladder, level 2 market data depth as well on the right-hand side, just to give you that additional context, in addition to the kind of visualization here that you've seen before. Hovering over any of these tells you obviously buy or sell order. and some information around sort of price, time on the axes as well, and then a breakdown below of all the different blow-by-blow messages that are involved in that piece. So very similar and exactly the same from a case management perspective, workflow perspective, whether you're using the machine learn models or whether you're using the customizable models here. So as I said, one combined uniform UI to give you both flavors, that more traditional, what we call parameter-based surveillance that you've got here with the customizable models, and then also the machine learn models as well, giving you that real belt and braces approach. So in the event that maybe, you know, the customizable models parameters weren't quite calibrated correctly, the machine learn models will catch that. It gives you that oversight and then, you know, input to maybe go back and want to review the customizable models parameters that you've got to make sure that going forward you would capture that type of behavior. As I said, just bringing the two together, both flavors, all under one shop. So in terms of me, I'm going to hand back to Ted. Ted, do you want to take over?
Yeah, sure. Well done. And I'm just going to reiterate one point that both you and Jay made at the beginning of your presentations, which is even though there's all of this detail, there's an amazing amount of content available on the TT-Score platform. It all exists within the paradigm of the scoring system, right? So Jay showed you that heat map at the beginning. The system directs the attention of the compliance officer to the place where your analysis time is going to be spent most valuably, right? So even though there's a lot of content here, the system elegantly directs your attention where it needs to go, which is at those high scoring models, right? And that's where you use all these analysis tools that we're showing, because I know it can be a little bit overwhelming, the amount of content available. So let's go to the questions. Okay, so the first question is, in the shown example, the scenario was that spoofing was done by one single trader, whereas there could be a team of traders involving, you know, in this type of layering, which is a good point. I mean, Jay, do you want to comment on how, you know, there's not only cross-product spoofing, but there's cross-trader spoofing, which is true.
Yeah, so right now we have 4 different flavors, if you will, of spoofing. The one that I showed was the most basic level, which is a single trader ID and potentially multiple instruments. However, collusive spoofing, we will be generating the results at the company level, not the individual trader level. And when we're generating them at the company level, that can mean multiple traders that are engaging and essentially working together to spoof or are creating the appearance of spoofing. Then we also, in addition to the collusive spoofing, we also have these 2 models named automated spoofing and automated collusive spoofing. They are essentially the same. However, in order to be bucketed under the automated models, each order event within the alert has to be tagged as an automated order event. If there is even a single manual order event in that alert, it will then be bucketed under the normal spoofing or collusive spoofing models. And just to give a quick, just to touch on this quickly, the automated models have been adjusted in a few different ways to handle automated trading activity and algorithmic or high frequency trading activity more effectively, in order to make sure that there's not a high rate of false positives, and also to make sure that the alerts are not too long. We want to still keep the alerts to being within, you know, somewhere around anywhere from 5 seconds to maybe at the longer end, at the most, you know, a minute at the longest end, to make sure that we're still very clearly identifying the potential patterns of spoofing and visualizing them and making it very easy for the compliance officer to do the analysis and see where those imbalanced fills are being received in the activity.
So that's the purpose of our collusive spoofing model, is to address that very scenario, which is important. So it's a good question. The next question is, how large was the training data used for the spoofing machine learning model?
Yeah, so, you know, this goes all the way back to when we were actually a startup company in Chicago. I would say, you know, we've used thousands of examples of spoofing. And the way that we've done that is you get the data set, You segment it into the clusters, and then you label those clusters as positive or negative. And then you do various different types of data science techniques to extract mathematical vectors from those labeled clusters in order to create a model that will then, go through various different precision recall curves or area under curve type of data scientist testing to make sure that the precision recall and all that is in line with what the expectations and what you hope to achieve. One thing to note is that we do have the ability to continue to retrain the spoofing models. However, we have reached a level of precision at this point where we feel like we don't want to experience overfitting of the algorithm and potentially get diminished returns. We like having some elasticity within our spoofing models because it will then have the ability not only to identify patterns that we have trained on, but also patterns that we may not even know exist yet. And that has come up in the past where we've identified things like vacuuming, which was a pattern of spoofing that prior to TT-Square identifying it was not really on the radar for people, and we were the first to identify it. So,
yeah, and that's great. And I'll also point out that we used real regulatory cases to train the models in many instances. So big research projects, find any place that a regulator has issued a fine and replay that into the machine learning and make sure that it can be detected. Okay, the next question is, does TT-Score provide ready-to-use mapping of related order books, or is it for the client to create the product mapping at their end and ingest into TT-Score? Does TT-Score provide ready-to-use mapping of related order books, or is it for the client to create the product mapping in their end? Oh, okay,
yeah. I think the only thing that we rely on our users to do as far as any kind of manual input of products is in the configurations of the correlated products that I was showing before. Excuse me, right here where you can input the product combinations that you want. That is the only real work for that you need to do. Everything else is already, we handle all that. We have all the market data. We have all the other stuff that goes into replaying the order books within the ladders and things like that. We're just asking our users to create these product sets for cross product. And then if the user so desires, they also have the access to create ability to create their own parameter based alerts as well. Those are the only things that we ask our users to do.
Yeah. And I'll also point out, this is the first release of a new to the industry capability, right? And so I would expect that in the coming quarters, we will develop some linkage packs, right, to get the feature started. Yeah, but right now it is on users to link products that they want to link. How do the exchange models compare to TT-Score in terms of surveillance? Should it be assumed that both models are detecting the exact same behavior, or are models different and one better than the other?
So the way we handle that is we have, a lot of documentation about all the models, be it the machine learning spoofing ones or the configurable ones. Basically, the process is you have a choice. You can use the out-of-the-box machine learning or some of the other ones that we offer that we've calibrated the parameters here for you. They're essentially out of the box. We call these our core models. And we offer you the ability to view all the different parameters and things around those. And then as Dan was showing earlier, we also have the new configurable models where you have the ability to adjust those parameters yourselves. And I wouldn't say one is better than the other per se. I would say that some people prefer having more control over the parameter settings. And if that is the case, be it because they have specific products they want to monitor in a particular type of way, or their firm trades in a particular way, we want to make sure that you do have the ability to have control over the alerts that you're generating in those instances. It's not necessarily that one is superior over the other. I will say, however, that the machine learning models for spoofing, that's the only area where we use machine learning. And in my personal opinion, I think that it would benefit people to be using both the machine learning and potentially configurable models for spoofing that they're potentially tailoring themselves if they want to have both the control and a second line of defense or a sanity check on their parameters because of the machine learning capability with the spoofing models.
All right, we've got one more question right now. Anyone else who has a question, feel free. We do have about 10 minutes. Configurable models seem not to be available yet for my company. Is this already rolled out to everyone?
So the configurable models is available and ready for customers to consume. However, it is an additional model to kind of what we've or additional module, I should say, to the existing SCORE platform. So if you've got an interest in taking a further look at the configurable models, then that's something we can enable and look to, potentially trial with you in your firm as a an additional piece that we can enable at any time. So feel free to reach out and get in touch, and we're more than happy to go through that with you.
And so just to be clear, right, the cross product feature is available right now in our production environment. Configurable models will be available in early July. Well, we appreciate you taking time on a Wednesday morning or afternoon in Europe to learn about the new features of TT Score. Myself, Jay, and Dan are available. Our contact information is in the invite. And if you have any further questions, please reach out to any of the three of us. We'd love to talk about this product. We're very proud of it. Thanks again.